Very good afternoon to everyone, and welcome all of you in this session. I'm delighted to welcome you all to this insightful session on navigating IFRS Sustainability Standards. I am Arushi Thakur, and I have the privilege of moderating today's discussion for you. Sustainability reporting has rapidly evolved from being a voluntary initiative to an essential part of corporate disclosures. With the introduction of IFRS Sustainability Standards, IFRS S1 and S2, by the International Sustainability Standards Board, companies now have a global framework to integrate sustainability risks and opportunities into their financial reporting. The objective of today's webinar is to help businesses, investors, and stakeholders understand the significance of these new standards, their impact on corporate disclosures, and how organizations can align with them effectively. So we have an esteemed panel of experts with us today who will share their perspective on why these standards were introduced, what they mean for businesses, and how companies can start preparing for implementation. So by the end of this session, we aim to provide you with a clear understanding on IFRS S1 and S2. With that, I would like to extend a warm welcome to all our panelists and all the participants joining us today. So let's get started. Now, it is my absolute pleasure to introduce our esteemed panel of speakers. We are honored to have with us three distinguished experts who bring a wealth of experience in sustainability reporting, financial disclosures, and regulatory compliance. Our first speaker, Mr. Hussain Parpia, he is the head of innovation in sustainability, coming with an experience of 17 plus years in environmental management and sustainability. He is an ISO 14001 EMS lead auditor, ISO 14064 GHG lead verifier, and a certified professional in carbon footprint by CII. Our second speaker, Mr. Satish Ramchandani, is a co-founder of Updapt, which is an ESG tech company. Prior to Updapt, he has worked in leadership capacity in firms such as CRISIL, S&P Ratings, Bank of America in head of business and CFO roles for 20 years. He carries experience across strategy, business development, consulting, ESG, CSR, corporate finance, addressing key stakeholders such as board, audit committee, institutional clients, governments, and investors. He is a chartered accountant and MBA by qualification. Our third speaker, Rahul Krishnamurthy, is a mechanical engineering graduate with expertise in sustainability and climate tech innovation. Currently serving as a product lead, he drives the development of advanced ESG platforms that enable businesses to achieve their sustainability objectives. With experience spanning operations at Adani Power and transformative projects at Updapt, Rahul is committed to creating impactful solutions for a sustainable future. Now, we have this wonderful session panelist with us, so we should go through some webinar rules. I know we have a lovely audience and everybody's much aware about all these rules, but still, let's go over a few important guidelines to ensure a smooth session. The meeting will be recorded and this is an open session with an invitation to all. So I request to keep the discussion within the mentioned topic. We request restriction from spamming or marketing during the session. And after the webinar, the floor will be open for questions from the audience. Please ask your question using the raise hand feature. As your turn comes, unmute yourself and please introduce yourself and your company briefly before asking any of the queries. You may also please keep entering your queries or questions in chat box and Q&A section, and we shall get back to you. Now, before beginning, this session is being organized by A A Garg Co in collaboration with Updapt. Before we begin, I'd like to take a moment to introduce A A Garg Company, which is a leading management consulting firm specializing in ESG, extended producer responsibility, corporate finance, and business operations. With a team of sustainability specialists, environmental engineers, MBAs, chartered accountants, and technical experts, we deliver tailored technology-driven solutions to help businesses navigate complex regulations and sustainability challenges effectively. At A A Garg Company, the mission is to drive client success while creating a lasting positive global impact. Now, I would like to invite Mr. Satish to introduce Updapt. And Satish, thank you so much for joining us today. And the floor is yours. Thank you.
Hi, thanks, Arushi. I hope I'm audible, guys.
Yes. Yes, you're audible.
Yeah, yeah. I think good afternoon and good evening to everyone, and great to be here. I think very pertinent topic. We all know there are multiple sustainability standards framework floating around, over the years, and I think IFRS Foundation at the right time in 2021, had established International Sustainability Standard Board. Right, I was pretty happy about it personally because one of the reasons, I have a chartered accountancy background. And I remember 20 years back, Indian accounting standards were floating everywhere, and there were so many challenges, largely in the international community, because of different rules or methods of accounting, among the various standards acceptable in the global markets and in India. And I think IFRS is a perfect platform. I personally am pretty sure the objective of setting up this board and the standards, which is to bring a good comparatives between the global organization and also increase transparency, building confidence among the business ecosystem and the investor ecosystem. I think it's going to go a long way, and I'm pretty sure in coming 3 to 4 years we'll see a lot of standardization in reporting, ESG and sustainable performances, its disclosures, the kind of data available in the market, and its usage, by the various participants in the market, which eventually would mean that good quality data, maybe less of green washing, which obviously is a function of intent, but at least we'll have clean, transparent disclosures, standardized disclosures again, which will benefit the business. So yeah, I think about Updapt, just a couple of lines. We are now about 125 clients now across various industries, geographies, in India, Singapore, Middle East, South Africa, Nigeria, some clients in US, a couple of them in Europe. We invest a lot in a product, right? Build multiple modules over the last few years. Monitoring reporting is a flagship. We have built value chain partner, net zero, double materiality, finance emission for the lending community. We also have a product for the funds. So I think committed to that space in terms of investing a lot in product, aligning it to global requirements. And I think maybe on the next slide, as I said, we have about 120, 30 clients. Again, some of the clients are using it for CSRD purposes. Some of the clients have also asked for IFRS, which is a topic of today's webinar. We have also aligned a product, the mapping of various global reports to the IFRS standards also, which my colleague is going to cover in some time now. So yeah, that's it from my side, and I look forward for this webinar, and and let's keep chatting, guys. Thank you.
Thank you so much, Satish. We are very happy to have you with us on this session. So yeah, so now after this introduction of Updapt, now I would like to invite Mr. Hussain Parpia to guide us through IFRS S1 and S2. Hussain, the floor is yours.
Thank you, Arushi. Good morning, good afternoon, good evening, everyone. Let's begin today's content with the introduction of IFRS. So IFRS stands for International Financial Reporting Standards. These are globally recognized standards developed by the IFRS Foundation. They provide a consistent framework for financial and investor-focused sustainability reporting that companies across the world can follow. The IFRS Foundation oversees two key boards. First, we have the IASB, which is International Accounting Standards Board. This board is responsible for developing IFRS accounting standards. Over 140 jurisdictions have adopted these standards, ensuring that financial reports are transparent, comparable, and reliable across borders. Second, ISSB, which stands for International Sustainability Standards Board. So complementing the word of IASB, the ISSB focuses on developing IFRS sustainability disclosure standards. These standards aim to ensure that sustainability reporting is consistent and meets the needs of investors globally. Next slide, please. In this slide, let's delve into the concept of materiality as outlined in the IFRS Sustainability Standards and understand its significance in corporate reporting. To begin with, let's understand the definition of materiality as per IFRS Sustainability Standards. It says information is considered material if omitting, misstating, or obscuring it could reasonably be expected to influence decisions that the primary users of general purpose financial reports make. Concerning the scope of its application, materiality applies to both financial statements and sustainability-related financial disclosures, ensuring that primary users such as investors, lenders, and creditors receive decision-useful information. Now, let's look at how IFRS Sustainability Standards approach materiality. First, there are entity-specific considerations, which means companies are required to determine what is material based on their specific circumstances, including the business model, industry, and the potential financial impact of sustainability-related risks and opportunities. Second, it has investor-centric focus, which means that the standards emphasize financial materiality, aligning with the expectations of capital markets. This approach focuses on information that could influence the decision-making of primary users, rather than broader environmental, social, and governance impacts. Third, it calls for integration with financial reports. So IFRS S1 mandates that sustainability-related financial disclosures be provided alongside financial statements. This integration offers a comprehensive view of an organization's enterprise value, reflecting how sustainability risks and opportunities could affect its prospects. Next slide, please. Now let's start with the overview of IFRS S1 and S2, the two investor-focused sustainability disclosure standards developed by ISSB, which is part of IFRS Foundation. Their main goal is to establish a global baseline for consistent and comparable sustainability-related financial information. Starting with IFRS 1, titled General Requirements for Disclosure of Sustainability-Related Financial Information. This standard sets out the overall requirements for companies to disclose sustainability-related financial information. It primarily focuses on how sustainability risks and opportunities can impact a company's future prospects, ensuring that the information disclosed is transparent and comparable. Moving on to IFRS S2, which deals with climate-related disclosures. So this standard specifically addresses climate-related risks and opportunities. It requires companies to report on aspects such as governance, strategy, risk management, and key metrics and targets related to climate change. Notably, these disclosures align with the recommendations of Task Force on Climate-Related Financial Disclosures, also known as TCFD. Together, these accounting and investor-focused sustainability standards integrate sustainability and climate-related information with traditional financial reporting, helping investors and stakeholders make more informed decisions. Next slide, please. In this slide, we'll explore the key milestones in the development of IFRS Sustainability Standards, both IFRS S1 and IFRS S2, highlighting their evolution over the past decade. Starting in December 2015, which marks the formation of the Task Force on Climate-Related Financial Disclosures. So the Financial Stability Board, FSB, established a TCFD to develop recommendations for more effective climate-related disclosures that could promote informed investment, credit, and insurance underwriting decisions. Next, TCFD releases final recommendations in June 2017, wherein the TCFD published its final recommendations, outlining 11 recommended disclosures organized around 4 core theme areas, which is governance, strategy, risk management, and metrics and targets. Next, we see in November 2021, there was establishment of the International Sustainability Standards Board, ISSB. So the IFRS Foundation announced the creation of the ISSB during the UN Climate Change Conference in Glasgow. The ISSB was formed to develop comprehensive global sustainability disclosure standards to meet investor information needs. Next, in June 2023, ISSB issues its inaugural standards, IFRS S1 and S2. IFRS S1 titled General Requirements of Disclosure of Sustainability-Related Financial Information, and IFRS S2, which is Climate-Related Disclosures. The S2 adopts and expands on the 11 TCFD disclosure recommendations. And finally, we see in January 2024, IFRS S2 became effective for annual reporting periods beginning on or after January 1st, 2024. Next slide, please. Historically, sustainability standards were extremely fragmented, infamously known as the alphabet soup of sustainability disclosure standards. Different regions and industry bodies each had their own framework, which often overlapped and sometimes even conflicted with one another. This created confusion and inefficiencies for both companies and investors. As you can see in the slide, a significant consolidation took place. The Sustainability Accounting Standards, SASB, and Integrated Reporting were merged to form the Value Reporting Foundation. On the other side, we see Climate Disclosure Standards Board, which was originally established by the Carbon Disclosure Project. These two entities, the Value Reporting Foundation and Climate Disclosure Standards Board, were later merged into International Sustainability Standards Board, or ISSB, which is now part of IFRS. One of the key influences in shaping these new standards has been the Task Force on Climate-Related Financial Disclosures, TCFD. Both IFRS S1 and IFRS S2 incorporate the TCFD structure, which requires companies to disclose information across four key theme areas, which is governance, strategy, risk management, and metrics and targets. In fact, the disclosures in S2 standard are specifically aligned with the TCFD recommendation. Additionally, it is also important to note here that the standards developed by IFRS are designed to complement with Global Reporting Initiative. This complementary relationship helps ensure that organizations can provide comprehensive, reliable, and comparable sustainability information that meets the needs of all stakeholders. Next slide, please. In this slide, we will explore the advantages of implementing IFRS S1 and S2 standards, focusing on the benefits for companies, investors, and stakeholders. For companies, first, there is enhanced transparency and credibility. So adopting IFRS S1 and S2 promotes a clear and standardized reporting, fostering trust among investors, stakeholders, and customers by showcasing a company's commitment to sustainability. Second, there is improved risk management and strategic planning because these standards assist companies in identifying and managing sustainability related risks and opportunities, thereby enhancing resilience and supporting informed strategic decisions. For investors, firstly, there is consistent and comparable data for decision making. So IFRS S1 and S2 improve the transparency and comparability of sustainability information, enabling investors to make more informed decisions. Secondly, enhanced understanding of sustainability impacts. Since the disclosures enable investors to assess how sustainability risks and opportunities impact an organization's financial performance, it leads to more accurate evaluations. Lastly, for stakeholders, there is a greater accountability and trust in corporate reporting because by adhering to these standards, companies demonstrate a commitment to transparency and responsibility, which strengthens stakeholder trust and fosters a positive corporate reputation. Next slide, please. In this slide, let's explore IFRS S1 titled General Requirements for Disclosure of Sustainability Related Financial Information in detail. As you can see, there are four key theme areas I talked about, wherein sustainability related financial information is disclosed in four key areas, namely governance, strategy, risk management, and metrics and targets. Starting with the governance theme, which is from para 26 to 27, we have key disclosure areas such as board and management oversight of sustainability risks, which includes identifying the board committee responsibility for governance, disclosing how sustainability responsibilities are assigned, and explaining decision-making process for strategy and risk management. The second theme, which is strategy, is from paragraph 28 to 42, and it involves 5 sub-themes. Firstly, sustainability-related risk and opportunities, which is from paragraph 30 to 31, business model and value chain, which is para 32, strategy and decision-making, which is paragraph 33, financial position and financial performance and cash flows, which is paragraph 34 to 40, and resilience, which is 41 to 42. So the key disclosure areas in this particular theme is risk and opportunities and financial impact, wherein we describe sustainability related risk and opportunities that could affect the financial position. We explain the impact on business model, strategy, and financial planning. And also we ensure consistency between sustainability disclosures and financial reporting. In the next theme, which is risk management, which is from paragraph 43 to 44, includes identifying, assessing, and monitoring sustainability risks, wherein we try to explain how sustainability risks are identified and assessed. We define how sustainability risks are integrated into enterprise risk management, and we disclose how sustainability risks are prioritized and monitored. In the final theme, which is metrics and targets, from paragraph 45 to 53, the key disclosures are performance indicators for sustainability related risks and opportunities. Herein, we try to report on sustainability related metrics relevant to the company's business and industry. We disclose qualitative and quantitative sustainability targets and progress tracking. And also we ensure alignment with financial performance and industry specific standards. Next slide, please. In this slide, we try to explore IFRS S2, which is titled Climate Related Disclosures in detail. As you can see, again, we have 4 theme areas where there are climate related disclosures. So again, we have governance, strategy, risk management, and metrics and targets. In the governance theme, which is from paragraph 5 to 7, the disclosures are mainly regarding board and management oversight of climate related risks, wherein we identify the board committee responsibility for climate governance, disclose how climate risk responsibilities are assigned, and we explain climate related decision making process. In the next theme, which is strategy, from paragraph 8 to 23, we have 5 themes, sub-themes, which is climate related risk and opportunities from paragraph 10 to 12, business model and value chain, paragraph 13, strategy and decision making, which is paragraph 14, financial position, financial performance, and cash flows, which is paragraph 15 to 21. And lastly, climate resilience, which is paragraph 22 to 23. The key disclosure areas for this theme is climate risks, opportunities, and financial impact. So herein we try to disclose and describe how climate risks and opportunities affect business prospects. We try to explain the impact on financial performance and cash flows, and disclose transition plans and scenario analysis. For example, 1.5 degrees Celsius and 2 degrees Celsius pathways. Next up, we have the risk management theme, which is from paragraph 24 to 26. The key disclosure areas are identifying, assessing, and monitoring climate risks. Herein, we try to explain climate risk assessment methods. We describe integration of climate risk into enterprise risk management, and we provide details on climate-related risk monitoring and processes. In the final theme, which is metrics and targets, which is paragraph 27 to 37, there are 2 sub-themes, which is climate-related metrics, paragraph 29 to 32, and climate-related targets, which is paragraph 33 to 37. The key disclosure areas are climate performance indicators. So herein we begin with disclosing GHG emissions, which is scope 1, 2, and 3. We report on internal carbon pricing and capital allocation towards climate goals. And finally, we outline climate targets and progress tracking methods. Over to you, Arushi.
Thank you so much, Zain. Okay, sorry. Okay, thank you, Mr. Hussain, for such an insightful explanation. It was quite simplified, and I'm sure a lot of people would be facing a lot of challenges while navigating through IFRS standards. But after going through this session, I'm sure you will be facing less difficulties and you will be in a better position to understand what all is there in IFRS S1 and S2. Now, as we move forward, I'd like to invite Rahul to discuss how technology and a platform like Updapt can help organizations seamlessly navigate these standards and ensure compliance. Rahul, the floor is yours.
Thanks a lot, Arushi. Very good afternoon, everyone. So the fine gentleman before me did give a very good overview and insight into IFRS, both S1 and S2. Now here I'll be tackling an issue in which how do you operationally go about it? We all know that technology is pivotal in almost all the aspects of our everyday lives. So technology also helps you to streamline your entire sustainability reporting as well. So we have, again, I don't want to go much into detail about IFRS S1 and S2. So whenever we started building the solution, had to gather the requirements, what exactly was required from these standards. So GSRM, the four short acronyms, governance, strategy, then risk management, and metrics and targets for both S1 and S2. Arushi, you can move to the next one. So in general, the challenge we had was to give a solution in which the users can navigate through all of these aspects, get both qualitative and quantitative disclosures done, collected from a variety of assets or various types of operations that they had. So in this measure, you can move to the next one. The place where technology comes in handy is first starting to digitize the entire process. So right from helping you to collect the data, let's say it's a complex operation that you're following, multiple sites, multiple assets. So you need to streamline the entire collection from all of those granular units. Or if you want to conduct scenario analysis required both in terms of climate, that is for S2, in terms of general sustainability, that's for S1. So we have tools that will help you to analyze future scenarios, run stress tests, and so on. Then you have the main aspect of S2, that's GHG accounting, scopes 1, 2, 3. So we have a platform in which you can account for all your emissions from various operations, from various assets, materials that you use. Then the reports that you need, the analytics that is generated should not just be limited to IFRS, since Hussain was rightly mentioning, it's a combination of multiple different types of frameworks, be it the TCFD, be it the SASB, or be it GRI, all of which combine to form the IFRS. So you need to have an entity or a solution that's flexible enough to give you the outputs aligned with all of these frameworks, and then dashboards and benchmarking across your peers, giving you those intuitive insights and analytics. So that's the entire crux of the problem statement that we had and what we have solved using our digital ESG platform. So yeah, over to you, Arushi. Thank you so much.
Thank you so much, Rahul. This was today's session, everyone. We have covered a lot. So the first speakers, they have covered the technical part of IFRS S1 and S2, and Rahul here has demonstrated a wonderful demo of the Updapt platform that simplifies the process for you. So now, since this session has been incredibly insightful, packed with valuable information, I want to sincerely thank all the speakers for their contributions in making it so impactful. I would also like to express my gratitude to our audience for their patience and engagement. And at this moment of time, I'd like to take a moment to share an overview of the services that are being offered at A2G. So at A2G, we offer a comprehensive suite of ESG services designed to help organizations integrate sustainability into their core business strategy. So our ESG leadership advisory and strategy services focus on aligning sustainability with business goals, market trends, and executive training to drive transformation. We also specialize in materiality assessment and stakeholder engagement, helping businesses identify key ESG topics, align with global frameworks, and integrate ESG into corporate strategy. The other services that we are offering is ESG baseline assessment, net zero climate risk mitigation goals and initiatives, performance management, and governance and strategy. And other than that, we help in external reporting and ratings as well. I want to wrap up the session. And if any of you has any queries or any questions left, please feel free to reach out to us and drop us your queries through email, or you can directly reach out to us on the mentioned phone number here. So yeah, thank you so much for your participation and have a great day ahead. Thank you so much.